Welcome back to another deep dive. You know the ones where we take a real close look at the books you send us?
Uh-huh.
This time, it's all about using tech, like some really cool tech to improve your trading game.
Right.
The book, Cybernetic Trading Strategies, really caught our eye. I mean, it's got everything. Classic technical analysis, AI, even neural networks and genetic algorithms.
Yeah, that's quite the combo.
It is. So let's dive in, shall we?
Let's do it.
Now, this book was written back in 1997 by Murray Ruggiero.
Wow.
And what's fascinating is even then, he was already talking about using computers for way more than just charts and crunching numbers.
Right.
He wanted traders to, really unlock the full potential of computers to understand the market.
To understand and maybe, just maybe predict it.
Exactly. And to get us there, he starts with, the classics, intermarket analysis, seasonality, all that good stuff.
The fundamentals.
Yeah, but he doesn't just explain them. He gives you these really rigorous ways to test and analyze these techniques. Did you know that analyzing the S&P 500 and T-bond yields together can actually reveal patterns, especially around major events like the '87 crash?
Yeah, that's a pretty cool example because on the surface they seem totally unrelated,
Right, totally.
Yeah.
So by watching how bonds and stocks interact, especially during those wild economic swings.
You can get a sense of where things are.
And get a sense. It's like one market sneezes and the others catch a cold.
Huh. It's like a chain reaction.
It is. Okay, so we've got intermarket analysis. What other tools does Ruggiero give us?
Well, he goes deep, really deep into market cycles.
Okay.
But not just, eyeballing charts.
Right.
He uses this method called, it's a mouthful, maximum entropy spectral analysis.
Wow, that's a mouthful.
Or MESA for short.
Ah, much better.
Yeah. It was originally used for stuff like oil exploration, but Ruggiero applied it to market cycles.
Oh, wow. So we're talking, instead of just looking for those repeating patterns on a chart, we're using some serious math to understand the rhythms of the market.
Right. I like it. Like trying to predict the tides, right?
Yeah.
There's a cycle, but you need to understand, how often it repeats, where you are in that cycle, and how strong it is.
Oh, okay.
Best helps you do that for the market.
I see.
Breaks it down into frequency, phase, and amplitude, which can really guide your trading.
Okay, so frequency, that's how often the cycle repeats. Phase is where we are in the cycle right now. And then amplitude, that's got to be the size of the swings, right?
You got it. How big those swings are.
All right. But how do we actually use this in trading?
Okay, let's say you're looking at the DMARC, right? The book shows you how to figure out the main cycles for this market and then use those cycles to create a trend indicator.
So you're creating like a roadmap, but for the market's ups and downs.
Exactly. And it's especially helpful in those volatile markets where it's like, whoa, things are moving fast.
Yeah, you really got to be ahead of the curve.
Exactly. Anticipating, not just reacting.
I like it. This is great stuff. And Ruggiero provides examples, right?
Oh, absolutely. Concrete examples, charts, the whole 9 yards.
Yeah.
Shows you exactly how to apply this technique.
Fantastic. It's like taking the guesswork out of it. Oh, okay, so far we've talked about entering trades based on intermarket signals, cycles, all this good stuff.
Right.
But what about knowing when to get out? That's just as important, wouldn't you say?
Oh, without a doubt. That's where exit strategies come in, and Ruggiero has a whole section dedicated to this.
Really?
Yeah, it's often overlooked, but crucial.
It is, yeah.
And he doesn't just say, set a stop loss and forget about it.
Right.
He advocates using statistical analysis to find the best possible exit points.
Oh, interesting. See, I've got to admit, I've been guilty of focusing too much on entry and not enough on exits.
Yeah, it's a common trap.
So how does Ruggiero approach this statistically? What tools does he use?
Well, one tool is called a scatter chart. Helps you visualize those exit points using historical data.
Oh, I see.
So imagine you've got a hypothetical DMARC trade.
Okay.
You plot the profit at different points in the trade on one axis and the final profit on the other.
So you're basically looking at how similar trades have played out in the past to see where the best exit points might be.
Precisely. Data-driven exit planning.
I like that, data-driven exit planning.
Yeah.
Okay, my head is spinning a little bit, but in a good way. This is some seriously good stuff.
Yeah, it's a lot to take in.
We still have so much to cover, like neural networks and genetic algorithms, but those are pretty complex topics.
They are, yeah.
So where do they fit into all of this?
Well, those are the tools, Ruggiero brings in to take your trading to the next level.
Oh, okay.
They can seem kind of intimidating, but he breaks them down so that they're actually pretty accessible, even if you're not, a computer whiz.
Okay, good, good. I was a little worried there. Definitely intrigued, though. So let's dive into those next. Ready to explore the world of AI and trading?
Absolutely. Let's do it.
All right, we'll start with neural networks, which, they can find those hidden patterns that us humans might miss.
Right.
It's like giving your trading strategy a sixth sense.
Exactly.
Okay, things are about to get really interesting. I'm ready.
Me too.
All right, we're back and ready to dive into AI and trading.
Yeah.
Last time we were getting pretty excited about neural networks and how they can give our trading that boost.
Right, right.
But before we jump into that, I'm curious about something. We've been talking a lot about advanced techniques, but what about, good old-fashioned statistical analysis? Does that still have a place in all of this?
Oh, absolutely. In fact, Ruggiero starts the book by really emphasizing how important it is to understand those statistical properties of your market data.
Like,
like median, mode, standard deviation, all those good things.
Right, right. Those are the basics, but I have a feeling Ruggiero goes a bit deeper than, just textbook definitions.
He does, yeah. For example, he points out that financial markets, they don't really follow a normal distribution, which kind of throws a wrench in things if you're relying solely on those standard statistical measures.
Yeah, that makes sense. I mean, we all know that markets can go, a little haywire sometimes.
Exactly.
Those black swan events can really mess things up.
Exactly. And to account for that, Ruggiero introduces this concept called fractal distributions.
Fractal distributions. Okay, I'm listening.
Yeah. It's a fancy way of saying that extreme events, those big market swings, they're actually more likely than a normal distribution would suggest.
So instead of assuming the market behaves nicely, we need to accept that it can be a bit wild and unpredictable.
Right.
That feels a lot more realistic to me.
It is. And by understanding that, you can adjust your, risk management, trading strategies accordingly.
You're not caught off guard when things get crazy.
Precisely.
Okay, fractal distributions. Got it. So what other statistical tools does Ruggiero give us?
Well, he talks about hypothesis testing, which is a way to statistically validate your trading ideas.
Oh, interesting.
So let's say you come up with a new S&P 500 trading system, and you want to know if it's really making you an average profit of, $250 per trade.
Right.
Hypothesis testing can help you figure that out.
Yeah, because I know I've definitely fallen into the trap of thinking a strategy is working when maybe it's just been, luck.
Right, exactly.
Oh.
Hypothesis testing tells you if your results are statistically significant or just random chance.
So you're not just relying on gut feeling, you're actually, putting your trading ideas to the test.
Exactly, like a scientific method for your trading.
I like that. That's smart. Okay, so Ruggiero shows us how to apply these concepts to, different markets, analyze correlations, even figure out the relationships between different markets, which, hey, brings us back to in-market analysis.
It's all connected.
It is. By understanding those relationships, we can build, more robust strategies, right?
Absolutely. And once you have that solid foundation, then you can start exploring those fancier AI tools we talked about, like neural networks.
Okay. I'm ready.
All right, you ready to dive into those?
Bring it on. I'm especially interested in how they can help with those channel breakouts we talked about earlier.
All right, so remember how we discussed using a neural network to predict whether a breakout's going to lead to a big move?
Yeah. It's like having this AI filter for your trades, right? Weeding out the false signals.
Exactly.
Oh.
But Ruggiero takes it a step further and shows you how to build a neural network that can predict whether a breakout will result in a specific profit, say, $1,000 within a certain time frame, like 10 days.
Wait, so we're not just predicting the direction, we're actually predicting the potential profit.
You got it.
Wow, that's next level.
It is. And to make it even more powerful, Ruggiero suggests training this neural network on data from multiple markets. So instead of just the Swiss franc, you could include, the D-mark and the yen as well.
So it's like giving the neural network a broader perspective, more data to learn from.
Exactly. More experience to draw on.
Makes a lot of sense. What kind of data would we even feed into a neural network like this?
All sorts of things. Technical indicators like the ADX, cycle data from that meta-analysis we talked about.
Yeah.
Standardized price differences.
So, like, we're giving it this feast of data, all the ingredients it needs to make these accurate predictions.
Exactly.
This is fascinating. We're basically teaching a computer to recognize patterns and predict price moves based on historical data. But it feels like there's a lot of art involved too, right? Like, how do we choose the right inputs for the neural network?
You're absolutely right. It's not just plug and play. You have to carefully consider which inputs are going to be the most relevant, for the market you're trading and your specific strategy. And speaking of putting it all together, Ruggiero then shows you how to use intermarket analysis as the foundation for a neural network.
Okay, I'm really intrigued now. Tell me more about this intermarket neural network. What does that even look like?
So imagine using a neural network to analyze the relationship between the S&P 500 and T-bonds.
Okay.
These two markets are, fundamentally linked. And the neural network can learn to identify patterns in their divergence and then use that information to predict, turning points in the S&P.
So we're combining the insights of intermarket analysis with the predictive power of a neural network.
A dynamic duo.
It's a dynamic duo.
Yeah. And you can make it even more powerful by feeding it additional data, correlation analysis, predictive correlation, even technical indicators like the ADX, stochastic oscillator.
We're building like a super powered neural network here, but it's important to remember we're not just trying to predict whether the market's going up or down.
Sure.
We're trying to predict the magnitude of the move.
Yeah, absolutely.
With how big it's going to be.
You got it. And Ruggiero provides this comprehensive list of potential inputs for this neural network, including, intermarket oscillators, correlation data, even technical indicators for both the intermarket and the target market.
It's all about finding those subtle clues that can give you an edge.
Exactly.
Wow, this is getting pretty complex, but I'm really impressed with the level of detail here. It feels like we're getting a master class in neural network construction.
It is pretty in-depth.
But I'm curious about something. You mentioned earlier that it's important to find the right number of hidden nodes for your neural network. What did you mean by that?
Oh, that's a great question. So hidden nodes are basically like the processing units within a neural network. They're what allow the network to learn and make predictions. Okay. The number you use can have a big impact on its performance. Too few, and it might not be able to capture the complexity of the market.
Right.
Too many, and it might start overfitting the data.
Oh, okay.
Which means it performs well on past data, but poorly in real-time trading.
So it's a balancing act. We need enough complexity to capture the patterns, but not so much that it becomes like overly sensitive to noise.
Exactly. And Ruggiero recommends experimenting with different numbers of nodes to find that sweet spot where it's, accurate and robust.
So a bit of an art to it.
It is.
But the results can be well worth it.
They can be, yeah.
Okay, so we've built this incredibly sophisticated intermarket neural network. What's next? How do we actually use it to make trading decisions?
That's where the art of post-processing comes in.
Post-processing.
We can't just blindly follow the raw output of the neural network.
Right.
We need to refine those signals, make them tradable. So that might involve setting thresholds, using moving averages to smooth things out, or even adding filters based on current market conditions.
It's like taking the raw intelligence of the neural network and translating it into, a language that we can understand and act on.
Exactly.
Right.
And that's where your experience and intuition as a trader, really come into play. Neural networks are powerful tools, but they're not magic bullets.
Right.
It takes skill and judgment to use them effectively.
This has been an incredible journey so far. We've explored classical technical analysis, delved into cycles, and now we're building these incredible neural networks.
I know.
It's like with every step, we're upgrading our trading strategies. But I'm ready for the grand finale. Are you ready to unleash the power of genetic algorithms on our trading?
I'm ready. Let's do it.
All right, let's see how these virtual evolution machines, they can help us optimize our trading rules and maybe even uncover entirely new strategies.
Some really exciting stuff.
Yeah. Okay, we're back and ready to explore those genetic algorithms. I gotta say, this is where things get a little sci-fi for me.
It is pretty wild when you think about it.
It is. Last time we were talking about how these virtual evolution machines, they can help us optimize our trading rules, right?
Right. It's like setting up a virtual competition between different trading rules.
Okay, yeah.
They're all fighting for survival based on how well they perform.
Survival of the fittest, But for trading strategies.
Exactly. The ones that make the most money get to reproduce and pass on those winning trades.
I love that analogy. So how does that even work? How do we set up this competition?
Well, we use something called a fitness function.
A fitness function.
Yeah, it's basically it's a mathematical equation that tells the genetic algorithm how to judge the performance of each rule.
So if I'm looking for a strategy that, makes consistent profits without too much risk, I would create a fitness function that like rewards high profits and then penalizes big losses.
Exactly. Like setting the rules of the game.
Okay, yeah.
And the genetic algorithm uses that to guide the whole evolutionary process.
It's pushing the strategies towards those that meet my criteria.
Precisely.
This is starting to sound really powerful.
It is.
Can you give me like a more concrete example of how this would work, in practice?
Sure. Let's say you're interested in trading T-bonds, right?
Okay.
You'd start by defining a set of like basic building blocks for your trading strategy. These are called rule templates.
Rule templates. Okay.
Yeah. So, for example, a rule template could be something like, buy when the price momentum crosses above a certain threshold,
Right, right.
or sell when the price drops below a moving average. It's like giving the algorithm the tools to work with.
Okay, the raw materials.
Exactly. And then the genetic algorithm takes over. It starts, mixing and matching these rule templates, tweaking the parameters, even randomly mutating them to create these variations.
It's like a mad scientist in a lab coming up with all these crazy trading experiments.
I like that. And remember, the fitness function is there the whole time, guiding the process and making sure it stays focused on those most promising strategies.
So we're basically using the power of evolution to design our trading strategies.
That's the idea.
That's wild. But isn't this whole process limited by, our own understanding of the markets? What if there are profitable strategies out there that we haven't even thought of?
That's where it gets really interesting because they can often uncover hidden patterns and relationships in the data that we as humans, might miss entirely. It's like having this tireless research assistant constantly searching for those, hidden gems.
So we're not just replicating human intuition, we're potentially discovering entirely new ways to trade. That's incredible. It really highlights the power of these technologies. They're not meant to, replace human traders, right? They're here to enhance our abilities and help us see the market in these new ways.
That's a great point.
This whole deep dive it's been amazing. I mean, we've gone from, the foundations of technical analysis all the way to AI. And it feels like we've opened up like a whole new world of trading possibilities.
We have. We've explored how to use statistics to validate our ideas, build those neural networks to predict movements, and even evolve trading strategies with these genetic algorithms. And to think all of this was laid out in a book, back in 1997.
It really makes you wonder how far we've come since then. Just imagine what's possible today with all the, computing power and the data we have.
It's mind-blowing. The possibilities are truly endless.
They are. But as we wrap up this deep dive, we want to leave you with one final thought. What will you do with this knowledge?
What kind of trading system will you build? What markets will you explore?
The future of trading is out there, and it's yours for the taking.